Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 2nd of April 2020. And as promised, this is our daily market news update. The time currently is 2000 hours GMT plus 1. And so whilst UK and European markets have now closed, the American markets are still just open. So let's take a look. The Euro Stoxx 50 index closed up 8 points at 2,688. The FTSE 100 closed up 25 points at 5,480. The Dax Index closed up 26 points at 9,570. And the CAC 40 closed up 13 points at 4,220. Currently, the Dow Jones is up 205 points at 21,148, though it seems to have jumped 150 points in literally the last 10 minutes. The S&P 500 is up 12 points, and the Nasdaq is up 40 points at 7,401. Brent crude has had a good jump today, up $5.14 at $29.88, and WTI crude is up $4.57 at $24.88. The dollar index is also up, some 0.60 today at 100.28, once again breaking that psychologically important 100 mark. Now, despite the strength of the dollar, we're also witnessing higher gold and silver prices, so everything seems to be up, which currently stands as follows, but may change before the markets finally close. Gold is up $28 at $1,617, having reached a high of $1,618 and a low of $1,583, so breaking through that psychologically important 1,600 level. In sterling terms, it's up £22 at £1,304, that psychological £1,300 level. And in euros, it's up €40 at €1,491, €9 short of that psychologically important €1,500 level. Now, silver has also performed well today. In dollar terms, it's up 54 cents at $14.50, having been as high as $14.56 and as low as $13.94. In sterling terms, it's up 42 pence at £11.69, and in euros, it's up 0.61 euros at 13.36 euros. Gold and silver have performed well today in spite of a continuing rising dollar. And part of the reason for today's rise is the result of the US weekly jobless claims figures, which we advised all week for listeners to watch out for. These figures have soared past the 6 million level from 3.3 million last week, and again expectations of a rise to 4 million this week. This has indeed proven much higher than many forecasters envisaged, and have given gold another reason to be bullish. At a little over 6.6 million, it is double last week's figures. From a technical analysis point of view, gold has passed the 50-day moving average of 1592 and converted this resistance figure to a support figure, with $1,700 now being the next major resistance in sight. The short-term trend has turned positive, together with the short and medium-term momentum. This positivity, however, cannot completely ignore the MACD histogram, which is pointing to consolidation at this stage. Silver also rebounded today in line with gold's rise, and whilst this suggests that $15 is in sight, there is equally as much evidence to suggest that if gold does consolidate and fall back a little, then silver could fall back below that $14 level. Now, we admit, although we had anticipated terrible weekly jobless figures, which would push gold potentially higher, we expected silver to take an additional step back, mainly because of the potential loss of industrial demand. But it did not do this today, suggesting that investors are slowly now beginning to treat it as a monetary metal, or at least adding more impetus to it as a monetary metal, as opposed to the impetus lost as an industrial metal. And this we will have to look out for to see if this is what has appeared on the paper exchanges. Now, this is not confirmed as yet, as we may see a fallback tomorrow. But if silver does reach $15, then we can determine that it will move then almost synchronistically with gold. We now, therefore, because of silver's rise today, have a slightly lower gold to silver ratio, now standing just over 111 to 1. On the economic news front, yesterday's ADP figures were quite poor at minus 27,000 jobs in March, compared with plus 179,000 in February. And as already mentioned, the weekly jobless figures have more than doubled since last week. Trade deficit figures were more or less as expected, minus 39.9 billion for February. And factory orders showed zero growth for February against expectations of 0.2% growth. Tomorrow, however, is when the big data arrives, with the non-farm payrolls, unemployment rate, average hourly earnings, plus the market services PMI for March and the ISM non-manufacturing index for March all being announced. Now we have to bear in mind, and we did mention this in the weekly update last Saturday, that the non-farm payrolls will be a little out of date, and so may not reflect the latest weekly and possibly 2 weekly jobless figure gains. So next month's will certainly give us a very clearer picture. Nevertheless, the figures will still not be good. Now earlier today we produced a video entitled, "Is there really a gold shortage and does it matter?" where we highlighted the reasons physical gold was in short supply, with large premiums in the West and United States, and yet premiums in China have actually turned negative. We also covered Russia's decision to purchase no more gold. And yet again, we in the West are clamouring after it. So if you've not listened to that podcast, we earnestly recommend that you do if you have a spare 15 minutes. Now tomorrow, we will not be producing a daily update, as our weekly update will appear on Saturday, and we will be repeating a fair amount of the information if we waited until markets closed on Friday, so there is very little point in doing that. But we will, however, tomorrow provide another video around midday on a topical subject. Also, this evening, we're uploading a discussion on the Richard and Greg channel. And if you live in the United States or the United Kingdom, if you can, and we appreciate time is always of the essence, but if you're bored, then do listen to that one too. Although in British time, it will probably come out closer to 10 p.m. The data we discuss in that video is worrying to say the least. And yesterday we published on that channel also a video concerning the Brexit negotiations and whether they're likely to be delayed, forcing the United Kingdom to stay within the European Union beyond the 31st of December. Now, whilst we admit this may not be on the top of everyone's agenda, or even on the top of anyone's agenda at the moment in view of what is happening, we still think it's important to cover some news outside of the most topical subject at the moment. Finally, a brief announcement which we shall repeat on tomorrow's and Saturday's video. All those silver members, Silver Inner Sanctum members, eligible for our near-proof 1-ounce silver round, living outside of the United Kingdom, have now been sent their product with a certificate of authenticity. If you recall, there are only 100 produced and there will only be 100 produced. Now, all of those living in the United Kingdom may have to wait an additional 10 days or so, as we're having your coins delivered to our office and they are currently en route. The reason for this is that we shall be sending these out from our UK office. Otherwise, you will have been charged possible import taxes and VAT on the delivery. And we have taken that charge upon ourselves by having them delivered directly to us, and we will then ship them directly to you from within the country. So that's the reason for the slight delay, and we apologise for it, but we would rather it be delayed than suffer the embarrassment of you being levied a charge by the post office, which could actually run into quite a few pounds. We also wish to point out that those who remain with us as silver members for a second year will receive another coin of a slightly differing design, which we will deem highly collectible. And in addition, we shall shortly be making arrangements with you, providing you wish to have this, of course, for a one-to-one conference with myself and controversially Greg for up to 1 hour duration to discuss any topic you wish regarding our sphere of experience. So it would just be yourself, and if you have a partner, your partner if you wish, and Greg and I on probably a Zoom conference call, so just us, discussing whatever subject you may wish within the realms of confidentiality as well, of course. And we will be sending out details to you by email in the coming week or two. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting, of course, the Richard and Greg channel too. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.